G'day folks, Corey Hinde here, founder of The Good Oil, and you will realise that next to me is another human being. This is Tim Stewart. Now, this poor guy has actually come to visit me socially for a couple of days, but he's a very well-schooled business person, and I've always enjoyed talking to him about business-related stuff. So the conversation over coffee was, I want to start introducing guests into the show, and whilst we haven't finished the studio setup, that's on the project list at the moment. We do have one good mic. Tim has agreed to just jump in and talk. So, bit of background. Tim is an accountant. Okay, so Tim is not a marketer. He is an accountant with a keen eye for business. So, I thought it would be really useful to talk to Tim about helping small business owners to understand more of their numbers so they can make smart decisions, which is something that marketers try to do. We try to test out a theory, build it, implement it, and look at the data, and then make decisions. And the accounting team would do that as well. So, greetings, Tim. Welcome back to New Zealand. Before we get into the serious stuff, just tell people where you've actually been for the last. You left Hamilton, and then you went to
Mexico.
Yep.
That was for a month, and then Cuba, and then Guatemala, and then kind of lived, volunteered in Colombia for 6 months.
Cool.
And slowly made my way down to Bolivia, and found myself mountain bike guiding there. Loved it. It's been a year there, and I'd still be there, but my sister got married, and so back visiting New Zealand for a short time.
So first time back in 2 years
to
this great country.
Yeah.
And you're going back overseas for more of the same.
Yeah, for more guiding. So I'm going to be leading hiking trips and camping trips through the mountains and the Rockies.
Cool.
I just fell in love with the outdoor industry.
Cool.
And got very little roots holding me down.
Yep.
And so trying to kind of make a name for myself in adventure tourism and the outdoor industry.
Cool. Now, as we go, dude, people might chuck a question in here. So we'll see that come up. And if you want to answer it. Sometimes it'll be someone giving us a cheap shot, you just ignore it. But if it's a question that's of value, answer it, because that's kind of part of the deal. So what I want to talk about quickly is, before we're talking about like that North Star metric, so I think that most small business people look at how much profit did I make last week and how much money have I got in the bank. And I don't know if that cuts it, but if you were to look at small businesses and help them get that guiding light of numbers, where would a good starting point be?
It's first, it's working out what your North Star is. And so say you're in a service business of some kind, you've often got individual clients who are the ones paying you.
Yep.
And so having a raw number of revenue received obviously goes without question. But if you take that deeper, it's billed hours or clients paying me at the moment. And so when you have a set, this amount of people are paying me, they're the people that you've got to cultivate so that they stay loyal contacts. And then if you're trying to grow that, then you can take a step further and look at who are the leads that could potentially be paying me, things like that.
Okay. And then I guess it's just going level by level. So I've got X number of customers, I want to achieve X number more. How many leads are coming into that funnel? And what's our process like for following up?
But that's just the sales side. I mean, obviously it's profit that is king. And so you're looking at margin, basically. And so you've got this amount of revenue. You generally, say in your business, you've got cost of supply when it comes to AdWords costs, things like that.
Yep.
And the amount left over is what's paying the overhead bills. And so you kind of take that amount of money, and that's what you've got to cover your overhead costs, and you've got that. It's the money that you've got to invest. I
kind of feel like most small business owners don't allow enough for overhead, and they kind of look at things far too simplistically. Like I meet small business owners all the time, and I ask a few questions. I've almost given up asking these questions because people just don't know the answer, and I don't want to come across as a dickhead, really. But I'll say things like, what's your average customer worth over their lifetime? And they go, oh, look, I really don't know. And then I'll ask, what's your average cost of acquisition? What did you cost for that lead? What's the conversion rate? And people just don't know it. So from a marketing perspective, I try to get people to start to unpack that stuff. And all I can say to them is, look, get your financial reports from last year, look at all your marketing expenses, divide that by the number of new clients you got, and that's a cost of acquisition. That's a starting point. What else could someone look at from, say, their financial report for the year? What are some key numbers they could pick out and go, shit, I need to pay more attention to that? Like you mentioned before, cash flow versus profit, for example. So what are some things I could pick out?
So there's a couple of things there. I'll get onto cash flow versus profit later. But an important one is to look at what is not going to change based on the clients that I have. So there's some things that you're only incurring based on the cost, based on when you have clients. They're variable costs, and generally you don't have to worry about covering them because they only happen when you've got revenue. If you have office space or any of those capital investments, you've got to cover those. You've got to make sure your margin is coming enough to cover those. And so by keeping track of that, you can keep it in the back of your mind, and if suddenly your half your clients disappear for some reason, you know that you've got X amount of indirects you've got to cover, and you've got to make a decision whether to remove that office space or something. So that's an important metric. That's really what's going to decision on whether or not you're staying afloat. Because if you get that wrong, it's often too late. And that can completely sink the business. In terms of cash flow, you can be something that most people don't realize is you can be profitable. The business can be going wildly, but the business can still sink from cash flow problems. Often government, GST, they come times of the year, and especially if your business is seasonal, there's certain months of the year where you're putting out a lot of money for
like April seems to be a killer. Provisional tax comes up, GST comes up, so many things seem to pop up at the same time, and it doesn't matter how profitable we were in March, you've got to have a lot in the bank for April. And then May rolls around, there's often some terminal tax there, and I find that lots of people just don't have a true, roadmap of what's ahead.
Roadmap's a good word for it.
Do they need to have a tool? Like, are accountants not giving people the tools, or do people need to own that a bit better?
It depends on the individual. If you have a bit of an idea of the numbers, it would involve just talking to an accountant, understanding the key things, and then you can build the system yourself. Some people though, they don't have a sense of numbers. Their specialty is somewhere else. That's the case where you probably want to have something in-house, or basically someone to cover your bases. But it is pretty simple in terms of cash flow. You can just basically have a spreadsheet, or at least some kind of roadmap, in knowing which months are important outflows of cash.
The biggies,
and that'll allow you, say you come to start of March and you're thinking of investing in new equipment, looking at, hang on, I've got 30K coming out in April, I should probably wait till I get over that hump.
We've got a client who I was talking to last night, who's an accountant down in Christchurch, and we've been talking about some things that she might want to do in the future with her marketing. But I said to her, look, a firm I've come across in Hamilton, they do month-to-month packages. They never have that big bill. And I said to her, I think month-to-month works really well, because as a customer, you feel like you've got a working relationship, but also it's great for your cash flow, because, it's the reality of small business. You look at your bank account and you go, I've got that much money there, and you're busy doing your thing. And like I say to people in marketing, don't do your own marketing in terms of the hard stuff like Google Ads, because it's kind of like doing your own accounting. Outsource it and just focus your time on the important things.
Absolutely.
You've got to and I feel like in the accounting space, like small business marketing, we formed because there were no options for small businesses to reach out and get some good stuff happening for a small amount of money. And I kind of feel the same with the accounting. Like, firms need to really give more tools and planning devices and forward thinking, rather than it's the end of the year, here is my stuff. I've gone through that myself. I feel like there's a changing landscape because people are now using Xero, so they've got a handle on their numbers monthly rather than yearly. But I think that needs to almost couple up with, like, Facebook groups where they can interact with their accountant daily and say, and actually reach out. Like it's like a lawyer. You don't want to call your lawyer because you think, shit, this is going to cost me $1,000. Whereas if you had a retainer deal going on, you could ask those questions. And at the end of the day, you just want to do the right things. You're trying to provide a better service, a better product. Back to numbers though. So just mindful of time, because I want to try and keep it to less than 15, because I know that the average person just needs coffee number 5 by then. So back to numbers. So is there anything that you've seen, because you've been traveling, you've seen lots of these micro enterprises popping up. Are there common things that people just don't get from an accounting perspective?
It's hard to say because there's been limited businesses that have actually delved into the numbers, but it is often probably working out indirect versus direct costs. And knowing the importance of what your North Star is, what your key KPIs are.
So you told us what's an indirect cost? Give me an example.
Indirect cost is your office rent or salaries, payroll, basically something that if your business was to half, that is still going to be exactly the same.
Whereas direct is more about fulfilling that sale. So I sold a pair of shoes for 200, but I had to buy them for 100.
Yes, exactly.
Well, it's actually $50. The shoe game is a rip-off. Anyway, let's not go there. Okay, cool. I think that's quite cool. I think there's some value there. We might jump off because it's 11 minutes, but guys, just as a summary, Tim's here for another day or two. So if you've got any accounting or finance types of questions that we might be able to answer later on after a couple of soft drinks, then we can answer them later. So pop them in the comments below. And of course, that helps us to reach more people if you comment. So please put a comment in there. Lauren, hi. That's my sister-in-law down in Manawatu. This guy's from down that way. Good part of the world. So we'll finish up. Thanks for your time.
No worries.
Really appreciate it. I'll write you a check later on. You take checks?
No, you won't.
All right, we're out. Check you next time.